All right, I think we are live. Um, so, welcome, Stani, to the show. Very excited to talk to you again. So, just to give an introduction to everybody, my name is Jason. I am the head of research at a crypto investment fund called Spartan. And Stani here is the founder of one of the most important projects in DeFi called Aave. So, welcome to the show, Aave. Welcome to the show, Stani.
Yeah, that's actually, thanks for having me here, Chris. Yeah, that's a good actually point that Aave is decentralized, and I'm just one member, part of the community and the original team that built the protocol and keep still contributing. And I don't know if it's important protocol, but at least it's very like innovative in the sense what you can do with Aave, and yeah, very developer friendly protocol.
Yeah, absolutely. And I know we previously spoke on my podcast, Block Crunch, where we talked about the kind of nitty gritty of Aave. But I think for this discussion, since we're probably talking to a more kind of non crypto native audience, I think it'll be really interesting to kind of get your thoughts on DeFi lending in general. But before I kind of dive into that, why don't you give us some context here about kind of what Aave is for those of us who are not aware?
Sure, definitely. So, in essence, Aave is a liquidity protocol where you can deposit cryptographic assets and earn interest on those cryptographic assets. And then when you deposit those assets into the protocol, you can consume liquidity. So you have a credit line and you can borrow other assets, or you can delegate the credit line to someone else you trust. So in essence, traditionally, when we look at the cryptographic assets, usually you are holding them for market exposure. So you have a long position. And what Aave practically does, it creates the ability to earn yield on your assets. And mainly it might be, for example, Ethereum, Bitcoin, or stable coins, such as stable coins are practically cryptographic dollars that have their equivalent in a bank and are just represented in Ethereum blockchain. And it allows them to move more freely over the network. And that is practically what the Aave protocol is. And because it's deployed on the Ethereum public ledger, it means that any other smart contracts, decentralized financial applications can actually interact with the Aave protocol. This means that you can build products and services on top that consumes the borrowing liquidity, or you can actually use Aave protocol kind of as a reserve for your assets that normally are not yielding in your wallet. And there's some other interesting parts related to the protocol, but the reason we call it protocol in general is because it's not just one money market where you have, let's say, uh, assets that you can deposit, but you can actually create different kinds of money markets with different kinds of risk parameters, what kind of collaterals could be used, what kind of currencies could be deposited. And this creates interesting arbitrage opportunities for yield.
Absolutely, and the reason why I mentioned that Aave, in my opinion, is one of the more important protocols in crypto is one of the reasons is because of its sheer size. So Aave grew from zero to, as of today, I think almost 1.7 billion dollars worth of real value locked in the protocol.
Yeah.
So just to kind of kick us off on down this path about DeFi lending, how did you guys get there? How did Aave get to where it is today?
That's interesting. Like our work started very early. So I mean, my background was previously building Web2 financial applications, and by Web2, practically meaning non-decentralized financial applications, which is fintech, for example. And what we are doing in the Web3 is that kind of like we're changing the way kind of like the financial space is working on the back end. So changing the back end of the finance, where fintech is kind of like innovating on the front ends of the finance. And we started to build already in 2016 our first lending protocol on Ethereum called ETH short for Ethereum lending. And in 2017, early, we launched a mainnet. So we deployed the contracts to the mainnet where users could deposit collaterals and borrow funds, and other users could fund those loans. So that was essentially the very first lending protocol on chain. And it was very early in the sense that there wasn't much of a DeFi as a concept or as an ecosystem. There was one decentralized exchange, EtherDelta, and now we kept on improving the protocol we had. And as liquidity started to pile up in decentralized finance, we saw Kyber, we saw Uniswap, and liquidity protocols. Some of the cryptographic assets became very liquid, which practically means that you don't need to separate the risks on a user account basis. So that, let's say you fund a loan that has particular collateral, but you can actually pull them. You can pull the collaterals into a one pooled market. And that is how practically Aave was born, beginning of this year, when we rebranded from ETHLend to Aave and launched the protocol. And interestingly, we added the feature called flash loans. So it means that the funds that aren't necessarily borrowed from the protocol by the borrowers can be used in so-called flash borrowing. So anyone can come and flash borrow the funds without using any collateral, but just for one Ethereum transaction. And this means that you can do arbitrage and different kinds of refinancing opportunities in DeFi and provide kind of like a capital without any upfront usability, without any upfront capital. And since then, the protocol has been growing quite a lot. And I think that the parts why it's been growing, of course, there's sort of innovation in the protocol, but also we made it relatively easy for other innovators in the space in decentralized finance to build on top of the protocol. So most of the liquidity is actually not coming from our user interface, but from rest of the DeFi. And that is what the kind of like a composability is fascinating about.
So speaking of these other applications that plug into it, what's really mind-blowing to me is the fact that there's actually $1 billion worth, more than $1 billion worth of actual value that people entrust to this protocol. So what are most of these people who are depositing that much value into the protocol? What are these people doing? Are they using it to borrow assets to go short in the markets? Are they going levered long? What would you say are the main use cases today for lending in DeFi?
Yeah, so I think one interesting use case is practically going long in the sense that you deposit a collateral, borrow, let's say, stable coin, and then buy another asset or the same assets to have a bit of leverage. But more interesting use case for me is when you actually have a asset that you really appreciate. It might be because of the asset is a governance token that you are involved in the governance of that particular community, or it might be some other interesting reason. And what our protocol allows you to do is that you don't need to dispose your assets, and you can keep your long position, and even when you need liquidity. So you can borrow stable coins against your collateral and then convert them to fiat and then spend as you want. And when you actually want to close the loan position, you can simply repay the loan with your collateral. And that is very fascinating because it means that you get liquidity from your collateral. You don't need to dispose it, and still you can manage your liquidity. And this is very interesting in a sense that anything can be a cryptographic token. It could be representation of US dollars. It could be in the future representation of real estate. It could be representation of practically non-fungible tokens. For example, could be digital art and whatnot. And the amount of wealth actually everyone has is way more than we actually think about it. And being able to keep your wealth, whether it's cryptographic assets, governance tokens, without disposing them and controlling your liquidity and getting liquidity when you need it without selling is a big thing.
All right. So it sounds like a lot of the use cases right now, at least in the early days, have to do with kind of speculation, as you said, people going levered long and going shorting, and maybe there's also some examples of people kind of procuring liquidity for assets that they don't want to sell. They're borrowing kind of stable coins against that as collateral. So do you foresee kind of non-speculative use cases overtaking the predominantly speculative use cases today, or do you still see kind of DeFi lending as predominantly maybe a speculative the toolkit?
It really depends which side of the kind of like transaction you are. So I mean, if you are pretty much depositing, like the biggest use case, of course, for Aave is depositing funds and earning yield. In that case, you practically want to ensure that you don't deprecate your, asset value. So it's kind of interesting use case because, when you deposit stable coins, such as it's USDC into Aave, you get in return a USDC, so-called A tokens. And how the A tokens work is that when you receive more interest, so as your interest grows in the protocol, you're algorithmically credited directly the interest into your wallet balance where you're storing the A tokens. And what's interesting about it is that it's actually kind of like a permissioned savings account. So I would say maybe what the main use case could be, given the amount of depositors compared to the borrowers, is actually to retain the value of your funds that you have. Today, banks offer very low yields, and also you have the inflation that is also kind of like deprecating the currency as well. And being able to actually hold something that has a stable value and also generates yield and has a built-in automated treasury management and has a permissionless access globally, that is a big value proposition for the whole financial ecosystem. And also kind of like it has very democratic element there in the sense that, everyone has access to those yields. And from the borrowing perspective, I think that it really depends on what's the long asset that the users are using as a collateral. Because sometimes you're not speculating, but you just want to unlock equity of something. And I think we're very early in terms of tokenization and also kind of like what kind of asset could be tokenized, used as collateral. What's interesting here is that there is a lot of scalability, and I think just we need more innovation in the space, and that kind of like decides and helps to categorize whether we'll see less speculation in terms of those assets.
Yeah, and there's definitely a lot of interesting topics to unpack there. There's the real world assets, bringing those kind of traditional financial assets onto Aave, which we'll definitely touch on later. But you brought up a good point about the yields, because every time I talk to my traditional finance friends about DeFi, nothing really clicks with them until I mention, hey, by the way, you can earn 2-digit yields on your USDC or your USD deposits in your banks. If you take it out and put it into something like Aave or Compound, and their ears immediately perk up. So I think a lot of people are fascinated by just where is this yield coming from? How is it that DeFi can offer such good yields relative to traditional banks? If you just put your USD in your bank account, in your savings account, for instance.
Yeah, honestly, this is a very, very good question, and I've been looking at the yields and trying to kind of like compare what we have in traditional finance and also kind of like compare the market sizes. Yeah, usually yields as a reward mechanism goes in line with the risk involved, and also that determines the supply and demand. What I think is happening is that the DeFi space is quite small at the moment, and since it's accessible globally, there is quite substantial demand. And there is also a factor on what of the cryptographic dollars that are, let's say, in our protocol, how much the depositors are willing to receive interest. So my take is that there is not enough risk takers on the market supplying the liquidity, but there's more users that they want to consume the liquidity because it's accessible to them. And being able to, let's say, use your collateral, long position collateral as a long position asset as a collateral, globally permission fashion, seeing everything transparently and relying on smart contract execution, it opens up a quite wide market in that sense, and accessibility, and this brings up demand. So in other words, if depositing into Aave becomes easier over the time and the risk is becoming lower, so the risk is consisting multiple factors. We're applying the Aave risk framework on assessing what kind of assets could be added by the governance to the protocol, what kind of loan to value ratios and other risk parameters could be applied, and also there's the counterparty. This risk assessment includes counterparty risk, asset market risk, liquidity risks. I think many of the financial people know the terminology. I'm not going too much deep on that, but essentially it's a question of counterparty risk. For example, it includes not the actual counterparty, but for example, smart contract risk. And over the time, when the protocols become more battle tested, it could be fair to say that more institutional funds come in, and this means more larger quantities of the deposits, and then we will see a bit of kind of like a decrease in the rates until we see more increase in the utilization. And I think the risk factor is very important to tackle. We recently launched the Aave version 2. We have 4 smart contract audits. 5th one is coming, and formal verification, and also we have this safety module where our token holders are practically depositing and staking against rewards to ensure the protocols for the depositors in case of a shortfall event. So I think that once we get more de-risking, we will see more influx of the capital, and then the yields go down. But because of the fact that it's so wide open, permissionless, I think the yields will be still higher compared to traditional banking in that sense.
That's really interesting, and that's actually surprising because I always thought that it's mentally easier for me to be okay with putting down my assets as collateral because I earn a yield. I don't have to think about it. But then from what you're saying, it sounds like the demand on the borrow side is actually bigger than the lending side. Actually, more people want to borrow than lend, and that's why you have these very high yields. And your view is that they can probably sustain for the next year, 3 years, 5 years?
That's actually a good point, because usually when you look at the protocol itself, you see that 70% are depositing and only 30% are borrowing. And what you're actually referring to is that when you look at the bigger picture, it's actually opposite, that there is more borrowers than depositors, and that is why the rates are where they are now.
That's really fascinating. I haven't thought of it that way. And you also mentioned this other point about kind of bringing in real world assets, kind of expanding the market of DeFi beyond just crypto natives or speculators today. And I know previously you've talked on different interviews and podcasts before about bringing real world assets on chain. And that's kind of like the holy grail that a lot of DeFi protocols are trying to go after as well. So can you maybe talk about, what your thoughts are around that? What types of assets do you foresee as being the first types that will cross over from the traditional financial world to the DeFi world?
I think we already have quite a lot of real world assets. US dollar probably is the most tokenized in form of USDC, USDT, and True USD. So we already have real world assets, and I think what's happening now is that we're moving on the next stage where we're trying to get depth into the protocol. Tokenizing invoices, receivable accounts, real properties. There is sort of questions still involved. For example, when it comes to regulation, when it comes to, I think regulation is also kind of when it comes to tokenization, it's a question of like how you can scale, because when you think about tokenizing real estate, you get pretty lot of kind of questions about different jurisdictions and whatnot, and we usually forget that actually when we have tokenized dollars such as USDC, actually there's only one jurisdiction. It's the US. It's the US dollar that has been tokenized. So I think once people solve the fact and understand that kind of like you could it's enough to start from somewhere and expand the idea later on. We'll see more innovation, and I think this is something that's coming. But there's still a lot of work, not just tokenizing real world assets, but in the digital asset space. There's the tokenization of different kinds of positions by itself fascinating. When you provide liquidity to Uniswap, you could use those LP shares as a collateral in Aave. And for example, if you might have some sort of index tokenized, that could be used as a collateral. So kind of like there's two ways there. But what I would like to add to the discussion is DeFi shouldn't be only about getting dollars, getting real property, making it liquid and getting it into DeFi, but also about getting liquidity out of DeFi into traditional finance. And if you get this kind of like a effect, that is what gets DeFi to scale, because it's not only about unlocking liquidity, but I mean getting yield, but it's about unlocking liquidity. So if you tokenized value and can borrow against it, that and use that those borrowings in traditional finance, that is a big value proposition. And recently we released this feature called credit delegation, which practically means that you could delegate credit to someone else, and that someone else will borrow without a collateral. So your collateral is used as a bond. And what it allows to do is that maybe there could be in the future vaults where, let's say, a traditional financial institution could get credit delegations from Aave depositors to a certain extent, draw a credit line, let's say in a stable borrow rate, and use that credit line, converting to dollars and using it in real finance. And what it does actually, it brings more easier ways to obtain funding in terms of lending businesses and other kind of like financial businesses. And this is one of the features that I think will grow during the next years and might be even bigger than what we've seen with flash loans, if done correctly.
Yeah, this is definitely one of the points that I find the most underappreciated in DeFi. When I looked at one of the earlier DeFi projects, Maker, for instance, you have a lot of risk takers in DeFi that are depositing their ETH collateral to take on leverage, but then the DAI that they mint can actually be used by, say, unbanked people around the world. So you're almost like offloading, you leveraging the risk appetite of crypto natives, but then offloading this liquidity to the quote unquote real world, which I think is an incredibly powerful idea. And speaking of the real world, I think recently there's been a lot of rumors around the US imposing regulations to basically require KYC for wallets. So, as a DeFi native myself, I'm a little bit concerned about this, but I'm really curious about if something like this passes, how would that affect Aave? How would that affect DeFi in general?
It's hard to say where the regulation will go, of course. We definitely are trying to provide kind of like a legal icebreaking in the sense that, I mean, how different, let's say, decentralized finance in its decentralized fashion, like done correctly, designed decentralized way, is different from another decentralized financial platform, for example, Bitcoin, that is used for the payment application is practically, I mean, payment processing, or Ethereum. That's actually, especially with the ETH 2.0, where you can get yield by staking your Ethereum into the deposit contract. And DeFi as decentralized, but built on top of, let's say, Ethereum, how different it is. And if you are regulating all of this DeFi, I guess like the main question is, how do you regulate? If you regulate, you pretty much have to regulate the coin bases of DeFi, the businesses that are built around the protocols, in the sense that they are gatekeepers. And in that case, I kind of understand if there's the there's more KYC involved, but actually on the protocol level, it's difficult to apply. And there might be broken protocols in DeFi, as there are broken cryptocurrencies in the kind of like crypto space. But when we're looking at the solid DeFi protocols and the most decentralized ones, we can take example Aave Maker and Uniswap and think about it like how different they are and where the regulation could come in. And I think, you know, regulation is good, but we also need to remember that the idea of smart contract is that they are self-executing. So the regulation is being built by the idea of finance having, you know, middlemen. And that is why you need consumer protection, investor protection. But decentralized finance doesn't have middlemen. And what's interesting here is that all of those functionalities, even though investor protection, consumer protection, best execution can be built into the smart contract in a self-executing fashion, which leads to a situation where actually you have better finance, more efficient finance. And regulating that is difficult, but what could be interesting is actually think how we could build those features in the current ecosystem. And that's probably the question that the governances of the protocols need to think about it. Because it's not anymore building, let's say, governing Linux as an operating system, but a financial operating system, and you know how we get those things there.
That makes a lot of sense. And Stani, just to close this off, since we're coming to the end of the interview and panel here, if you were to make one bold prediction for the next year, for 2021, what would that be?
I think credit delegations will be bigger than flash loans. That's my
Yeah, that'll be super exciting to monitor. Well, once again, thank you so much for coming on, and thank you SCB for having both of us on. This has been really fun.
Thank you. Thanks for having me.
All right, take care,
Bye
everyone.
bye.
Bye-bye.
Cheers.